Hello, and welcome back to our third lecture video dealing with Chapter 9, which talks about long-lived assets. So in the previous video, we went over and discussed the three methods for calculating depreciation. In this video, we're kind of going to switch gears a little bit, and we're going to talk about expenditures. And we need to be able to distinguish between two types of expenditures. We have revenue expenditures and capital expenditures. Now, these expenditures are in conjunction with long-lived assets. Maybe. Oh, come on. There we go. Okay. So sorry about that. Okay, so the two types of expenditures we need to look at are revenue expenditures and betterment expenditures. Okay, so when we're talking about betterment, really we're talking about capital expenditures. Okay, so betterment is something that we do to the machine, or a repair that we make to the machine that actually extends the useful life of that asset. Let me give you an example. Buildings. Okay, we have to depreciate buildings. Buildings is a plant asset. And let's say that we add a new roof, okay, to the building. Well, the cost of that roof is actually, or let's start with the roof and what it does, right? The roof actually extends the useful life of that asset, right? So we call that betterment. Anything that we do to increase the useful life. Let's say we have a vehicle and we replace the engine in that vehicle. Because we replaced that engine, which obviously resulted in us having to spend money to do that, that engine or that new engine actually extended the useful life of that asset. Okay, so as we go through these types of expenditures, the main thing we want to ask ourselves is, does this better the asset? Does it extend its useful life? If the answer is yes, then we have to account for it a certain way. If the answer is no, that means it's a revenue expenditure. So revenue expenditures are things like maintenances and repairs. Very simple, low-cost expenses that we incur because we have a machine or property or plant, whatever. And it's just normal maintenance, normal repairs, things that we have to fix due to wear and tear on the equipment. Okay, when we have a revenue expenditure, we actually just debit an expense. The expense we debit will be repairs and maintenance. Now, these capitalized or capital expenditures, we have to capitalize these, right? And remember, I believe we mentioned it earlier in this class, what capitalization means. Capitalize says that we put it on the balance sheet and we recognize the expense systematically. Okay, so when we're talking about capital expenditures, what are we debiting? Well, we're not going to debit an expense. We're going to debit an asset. Okay, and again, those capital expenditures is either going to extend the useful life of the asset, it's going to improve the quality or the quantity of that asset's output. So if we have a large expenditure on a piece of equipment, and that expenditure or that repair that we do actually increases the efficiency of that machine, or it increases the efficiency of that machine's output, then we have to capitalize it. Okay, by booking these capital expenditures, really what we're doing with capital expenditures is we're actually reducing that asset's operating cost. Okay, so let's look at how do we account for disposing of a plant asset. Okay, so remember we said that we buy an asset, right? Whether it's a piece of equipment, furniture and fixtures, property, whatever, right? Building. we're going to use that for a certain amount of time, right? We said we estimate its useful life. And then what do we do once we reach that useful life? Normally, we get rid of that machine and we buy a new one, okay? So let me give you an example here. We're going to buy a car, and this car is going to help us to make deliveries, or a delivery van, we'll say, okay? Well, let's say that we anticipate or we assume that we're only going to use this van for 5 years. Once the 5 years are up, we're going to buy a new van, okay? So what we're doing here is we're disposing of an asset. There's one of three things we can do. We could sell it outright, meaning at the end of the 5 years, we could take our delivery van and put it on Craigslist and say, hey, we have a delivery van for sale. Or maybe we put it in a one ads, or we just sell it basically, right? We could retire it. Means we just junk it, we scrap it, right? It has no salvage value to us. We're just gonna jump it off or drop it off at a junkyard and whatever, right? Or we can exchange it. We can take that truck or that delivery van and we can exchange it for another delivery van, okay? So basically, either of those three options are an acceptable way to dispose of a plant asset. Now, we got to get it off our books, right? So how do we record the disposal of plant assets? Well, first of all, we needed to get the asset's cost off the books. Now, let's think for just a moment. What is involved in the asset? Well, we have the cost of the asset itself. We have accumulated depreciation that we need to get off the books. We're going to get some proceeds, right? Meaning we're going to get something for this asset. If we sell it, we're going to have cash coming in. If we exchange it, there's going to be some value there. If we retire it, well, the recorded proceeds are going to be nothing, really. Then we have to calculate, do we have a gain or do we have a gain or loss on the sale or the retirement or the exchange of this asset, okay? So how do we tell if we have a gain or loss on an asset disposal? Well, it's the difference between the market value, or it's the difference between what we receive and the book value that we removed, okay? I know this, again, might be as clear as mud. For right now, just take it for what it's worth. We'll work through some examples. So let's assume now that there's a vehicle. We had an original acquisition cost of $20,000. That vehicle has accumulated depreciation of $18,000. So right off the bat, we can look at that and say, okay, our book value for this vehicle is $2,000. $20,000 in acquisition cost minus the accumulated depreciation of $18,000. And let's assume that somebody's willing to buy this vehicle off of us for $3,500. Great. First thing we need to do is we need to get the cost off the books, right? Meaning we need to get that vehicle off our books. How do we do that? Well, originally we debited the vehicle account for $20,000. That's what we did originally. Today, we need to get that off our books. So how do we get an asset off the books? Well, we credit it. So we're going to credit our vehicle account for $20,000. Then next we need to get rid of our accumulated depreciation. So over the years, right, we always credited accumulated depreciation for the amount of depreciation expense. Well, we need to get all of that accumulated depreciation off our books. So in order to do that, we need to debit it. So we're going to debit accumulated depreciation for $18,000. And again, that's what it's on our books for, okay? Then we need to record the cash proceeds that we received. Well, in this case, we got $3,500. So when we factor all this in, our debits and credits, right? We notice that we're short, right? let's just forget about gain on sale real quick. We have $20,000 in credits for the vehicle, and we have 21,500, right, in debits. So we basically need $1,500 to balance out this debits and credits. We have a gain on sale of $1,500. Okay. An easier way to calculate that gain on sale is, well, it was on our books for $2,000. We got $3,500 for it. That's a gain of $1,500. Okay. So when we come back, we'll talk about intangible assets and what they are, how we account for them, and go from there. But real quick, the real takeaway from this video was differentiating between what type of expenditures we have for a plant asset, right? During the life of that plant asset, we're going to have expenditures. We looked at revenue expenditures and betterment expenditures. We know the main question is, does this expenditure increase the useful life of the asset? Does it make this asset more efficient? Meaning, can we increase our output by this expenditure? If the answer is yes, it is a betterment. We have to debit an asset account. Okay. We looked at disposing of an asset. Remember, we have to get everything off the books. We have to get our cost, our accumulated depreciation. We got to record what we're getting for this transaction or the proceeds, and then we need to record any gain or loss. Okay? So tune back in and we'll jump into intangibles.